Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. In a statement, shareholders of Kintyre Holdings Jamaica say plans to pursue a listing on the New York Stock Exchange remain on track and are not affected by ongoing legal proceedings involving Victoria Mutual Investments. The shareholders, led by Tyrone Reed, also emphasize that their shares and strategic initiatives are not subject to any court order restricting their activities. The shareholders clarified that the restructuring relates only to their own holdings and does not involve any reorganization of Kintyre Holdings itself. They further noted that any shares held by VM Investments are subject to separate legal arrangements and ongoing court proceedings and are not part of the restructuring exercise. Despite the developments, the shareholders say they remain confident in Kintyre's growth trajectory, pointing to assets exceeding $15 million and strong profitability in 2025. Two stocks on the Jamaica Stock Exchange give us an idea of what's happening in the medical industry. CEO of Medical Disposables and Supplies, MDS, Kurt Booth, says there will be an increase in the cost of medical supplies in the next 10 days based on information that he says he received from one of the company's international partners. Speaking to RJR News on Tuesday, Mr. Booth said that this is due to the impact of the war in the Middle East and on the destruction of crude oil and chemical facilities, and by extension supplies and prices. That said, another listed company, Indies Pharma Jamaica, is reporting on its financial statements net profit of $181.3 million on revenue of approximately $1.1 billion for the financial year ended October 2025, despite the impact of Hurricane Melissa. The company says revenue declined slightly by about 2.8% compared with 2024, reflecting disruptions to supply chains and operations following the Category 5 hurricane. Motorists will be paying more at the pump effective Thursday, April 9, following the latest ex-refinery price adjustments from Petrojam. Under the new prices, 90-octane gasoline will sell for $184.33 per liter, an increase of $4.50. 87-octane gasoline is also up $4.50 and will retail at $176.88 per liter. Automotive diesel fuel moves up 189.25 per liter, while ultra-low sulfur diesel will sell for $196.10 per liter, both increasing by $4.50. Kerosene has also gone up by $4.50 to $178.65 per liter. Meanwhile, propane liquid petroleum will decrease by $3.06 to $77.30 per liter, and butane liquid petroleum will fall by $3.06 to $86.02 per liter. Marketing companies and retailers will add their respective markups to the ex-refinery prices. For the trading period of April 8, 2026, the most actively traded securities were Trans-Jamaica Highway Limited with 22,525,991 units, representing 43.22% of market sales activities. Kintyre Holdings Jamaica Limited with 14,750,681 units, representing 28.3% of market sales activities. Lasco Manufacturing Limited with 3,646,965 units, representing 7% of market sales activities. Investor activity remained concentrated in manufacturing, conglomerate, and transportation plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for April 8, 2026. Forex traders recorded significant activity with strong demand across currencies. For the US dollar, trading margin reflected steady liquidity with the US selling at $158.93 and buying at $157.22. For the Canadian dollar, moderate gains supported by $1.19 transaction spreads. The Canadian dollar sold for $114.02 and was bought for $115.21. For the British pound, continued volatility offered short-term trading opportunities of $3.47 in profits for the banks. The British pound sold for $208.54 and was bought for $212.01. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, sometimes if you position your investment strategy the right way, you don't need a credit report. A margin loan is a financing option that lets you access cash using your investment portfolio as collateral instead of relying on your credit profile. Once your portfolio reaches a certain value, brokerage firms may allow you to borrow a percentage of it. This means you can access liquidity without going through the usual bank approval processes tied to income verification or credit scores. And that's today's business report. I'm Denise Williams, bringing clarity to capital, market, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.